And here we go today. Here we are at the Texas Real Estate Show for anybody that has an interest in real estate, learning about real estate, or just general informational purposes. Please like, subscribe, get on the table and dance in your kitchen just to make us happy. Whatever you choose to do, but we would like you to like and subscribe just to help the algorithm on YouTube. And we're here every Thursday at 12 p.m. just for you to dance on your kitchen table and just to get involved in some good real estate conversation. I'm here today with my good friend, Mr. James Lee.
Good morning, good morning. Well, it's not morning anymore, afternoon, shall I say.
It's just turned
We are here.
We are.
We are
How you doing,
here.
James?
Man, I can't complain. A little bit of a late start, but we're getting some things moving in the pipeline, so it's been exciting.
Out there?
What's that?
You seeing a bit of activity out there?
A little bit of activity. The bonds have been, performing pretty well, so we're excited about the direction that they're headed. So it is what it is.
Yeah,
we got to keep it in the middle of the road, as they say.
Yeah, we've seen a bit of activity as well.
Yeah.
A couple of people wanting to sell their homes, so it's pretty interesting. To sort of every year in January, it sort of, things start to take off a little bit. And with that being said, what I wanted to do was this morning to just start off, if we could, our local Realtors Association, HAR, which is the Houston Association of Realtors, which is it really is a very, very good Realtors Association. I think it's ranked 4th in the country, produced a weekly activity list. And this came up yesterday, which I thought was really interesting. So you all know that what I'm saying is true, because everybody's saying, oh, there's going to be a downturn. Oh, there's going to be a downturn. But the truth of the matter is, here we've got new listings on the market. I actually can't see the screen that well. Is that 3.3% or 33%? I thought it was 33%, isn't it?
It's 33%.
Okay,
No,
good.
it's 3.3 is what
No,
that says.
3.3%. Yeah, I can't.
It's an increase.
With my eyes, I have problems seeing that. But it's up. Started the year first week,
Right.
which isn't a bad start. Can you then go down a little bit? Stop there. Pending listings down. Bit of a problem, eh?
Pending listings.
What does that mean? What do you think that means, James? The prices might start to drop a little bit.
Absolutely, absolutely, and I think not in the aspect of a crash. We just want to be clear with that, but more of a normalizing, because things were high, unnecessarily. So this is more of a normalizing of the market.
Yeah, I would call it a flattening market. myself.
Normalizing, flattening,
Yeah,
whatever you want to call it, getting back
what I
down
that's
to
what
where
I-
it was.
That's what I would call it. There's
Yeah.
some people that are getting a bit scared, and I'm going to talk about somebody that's sort of getting scared in the market at the moment, where I was sort of started the process yesterday of purchasing their property for investment properties, and it's not costing me nothing to get
Yeah.
into the property. So I want to sort of, like we're going to share a video that somebody sent over, and I've got some comments on that. I've had 24, I'm not very quick, but I've got 24 hours to sort of think over it and ponder it. And then if we go down just a little bit more, what's also interesting, off-market listings. Now, that can be a number of things. Sellers withdrew more property listings from the MLS during the week one than what they did with week 2022. Off-market listings started the year 67.8% above where they were last year at the same total. A total of 1,411 homes went from active to off-market compared to 841 last year. Now, let me just tell you something that affects that figure. If you get agents changing companies, what they will normally do is get the sellers to terminate the listing because the brokers own the listings.
Mm-hmm.
And then what they will do at that point is they will transfer them listings to other companies. So there is a sort of a number in there which can affect that number. It's not the ethical way that it should be done, but in the industry it does go on. So the agents can take their listings with them because that's just the way it is, I guess.
Yeah.
But basically, I thought this was a really good snapshot of the market. What it doesn't show you is the solds,
Right.
which they won't really know till the end of the
Yeah, it's
month.
kind of early right now to get all the
It is,
souls
but for the
for
first
January.
week,
Yeah.
I thought that was actually a nice report from HAR. We'd love to get somebody from HAR on the show as a guest, um, just to sort of go on um, from their social media department to sort of get their views. But I really thought it was pretty interesting. I don't think we're going to get the collapse that everybody's saying. Like we've said, we might get a reduction in 10%. So, and what I want to talk about today, there's two things I really wanted to talk about today. Now we've spoken about the HAR review, and hopefully we can get these clipped later on for you just to make it easier for everybody. But the first thing is best strategies for first-time home buyers to buy a home. But before we get onto that, can you play that clip from yesterday that we played on the Olympian table? And then what I'd like to do is just pass some comments, because he's got some good points. I don't agree with everything he said. As I said, I am not the fastest kid on the block. I have to have time to think about things. And I thought about what he said. And I do think there are ways how you can get into a home. But like anything, it's education.
Mm-hmm.
That's why people need to like and subscribe our account so they can find out more. But let's just listen to this, and I'm going to call it a rant. But let's just listen to this rant, and then we'll sort of discuss it and talk about it.
I already owned a house. Yeah, because
buy a Frosty at an airport Wendy's today. The last time houses were actually affordable was when college degrees were actually useful. Have you doom scrolled Zillow lately? I don't know if that's the price of a house or if the realtor's cat walked across the computer and sat on the zero key. The only way to own a house now is to patiently wait for Mr. Beast to give you one. By the time I'm your age, the sun will have exploded. So who needs a house?
when I was your age, I already owned a house. Yeah.
Right, you ready on that? Well, my first thing is, with an attitude like that, you'll never ever buy a house.
Sure.
Right?
And I'm sure.
Because it's not in a constructive manner.
Right.
You're not thinking rationally. This is the type of bullshit that you get on social media, I agree with him about college education. I think college education, I told you yesterday, there was an article that I actually read on Mitch McConnell when he went to college, and he was one of the top college for a year in his college that he went to was $770.
Yeah, that's cheap.
Then I think there's a lot of Americans that have come over here, the Americans that are here, and they're not in a plus situation until they're over 30 because of their, loan.
Yeah.
That they've taken out just to go to college, and that doesn't determine that they're going to get a good job of 100 or whatever. So, is it worthwhile doing that? To be perfectly honest, I don't think so. I'm a college dropout, so I guess I'm the worst one to ask. But what I wanted to talk about, which I think, let's be constructive about some of the things that he made, which is best strategies for first-time home buyers to buy a home. What do you think they are, James? Because to me, there's basics, and if they haven't got them basics, I mean, the biggest problem I have with even my kids, to be perfectly honest, they just sit in their bedroom all day and play video games.
Right.
My son Jack, I'm very proud of. He's got a podcast. So there's different things that they do. But to me, to buy a house, which is very basic, I think there's a basic process that you have to go through, and it's going to take you a time to do it.
It does.
And education is the key.
That's the big part. You have to align yourself with someone that can help you be educated.
Absolutely.
Right.
And what I want to sort of comment on you is, if you're on YouTube and you're honestly looking at something and it says, oh, there's going to be a crash in the market, is that going to educate you to buy a house?
No.
But you've got these people online, YouTube, and all they want to do is to get your clicks so they get their check at the end of the month.
Right.
So I want to be honest with people. I actually offered on a house yesterday to buy a house with zero money down. You know the house I told you about?
Mm-hmm.
I made an offer on it yesterday.
And accept it?
Are
you waiting?
He said he'll have an offer for me within 24 hours.
Okay, so you might hear something today.
Yeah.
I hope you get it, man.
And
I think it'll be a good deal for you.
And just to let everybody know, it's a house that needs a little bit of touch up. Let's just say that it's not in bad condition, but the truth of the matter is, it's like what, $75,000 off the price.
Yeah, it needs a little TLC.
Yeah.
Yeah.
So what I'm saying to people is, it's all about education. So if you was advising a first-time home to buy a house, what would you say to do?
First thing to do, and I know this is not what normal thing is in the market. Of course, you need to have an idea what your credit is like. And how you find that out is you have to get with a lender. Get with someone that you know, that you trust, so they can help determine for you how much you can afford. Many times it goes the opposite way. People go and find a realtor, and then the realtor kind of shows them around to this loan officer if they can get them done, or this loan officer, whatever. But quite frankly, you should be able to determine what your credit is and what you qualify for by finding a lender that you can you can trust. Or if you know a realtor, usually a realtor will have a relationship with someone that they trust.
Right.
But what usually ends up happening, you don't know a realtor directly, so you go to this realtor. The realtor, their education may be limited in it because it's been this market has been so flooded with people that are just kind of licensed, shall I say? Because I think you really got to be doing business to be considered a realtor. But get with the realtor that can actually get you lined up with someone that can help you to determine whether or not you can qualify for a home and how much you qualify for. And the key with that is not having them push you around to a whole bunch of different companies if someone doesn't give you the answer that you think you want. A true reputable lender should be able to let you know what you qualify for. If there's anything you need to do those things then, so you can get to the next step. But a lot of times, people, to your point, people don't want to wait. They don't want to do the work. They want that microwave instant gratification.
Well, also what I want to share with you is, and I want to make it clear, to a big mistake that first-time home buyers perceive is that, and I'm going to contradict you a little bit.
Okay.
All right, is that agents should know the answers for the financing that's available for that buyer, but that's not the case.
Right.
Legally, we are not allowed. Legally, as real estate agents, we're not allowed to do that. They can get that information from a reputable loan officer, correct?
Correct.
Right. So, if you've got an agent that basically, if you have an agent that has that relationship, then hopefully that's where that's a good start, is
Right.
it not?
Absolutely.
So then you get your credit report.
Yep.
And then at that point, that loan officer, and only the loan officer, can really do this ethically, legally, whatever you want to call it, can get the best product for you to buy your first home. So he could turn around to you and say, okay, you can buy your first home when you've saved X amount of dollars.
Right.
You can buy your first home when if you've worked on your credit. Like, you have people that do a professional job of building people's credit, correct?
Correct.
All right. So that's another thing that you have to do. And one of the things that I will say is, if there's a realtor that's doing a loan, I've got one word to say to you: run. Because if you've got 5,000 loan products, haven't you? You've got so many different loan products out there that are set up in so many ways. There's no way that a first-time home buyer can know all them products, regardless who they're working for. And with the loan that you and me have just done at the moment, I mean, it's been frustrating for me to dig up that, the paperwork that needed
Sure.
because of the underwriters.
Sure.
But we've got it done, I'm glad to say.
Right.
But, in the chat today, we've got Jeffrey, and he's basically saying, can't Credit Karma tell me what my credit score is?
Sure, based on Credit Karma's scale.
But it's not the true.
No, it's not. Those Credit Karma is a company that takes your information to sell to others. So basically, you open up an account for Credit Karma, you can bet your bottom dollar you're going to get solicited to buy other companies as well.
Expanded itself. You only got to put it together, but Credit Karma has expanded itself so much now. You go in there to get your credit score, and it's selling you insurance, it's selling you
all
auto
kinds of stuff.
insurance, it's selling you credit cards, the best credit card you can apply for.
Don't get me wrong. It's not bad to get the information from Credit Karma so you know what's on credit, but that is not going to be the gospel for any lending institution because they use a different scale completely.
That's the point.
They use a completely different scale, different model that they use to actually give you a score. So it's no, yeah, you can use it. Yeah, you can use it. And the next time they ask, why do I need a loan officer? Well, you need a loan officer because he with the money makes the rules. So the loan officer is going to let you know what you qualify for based on your credit score. We're not going to use a Credit Karma credit score. We're going to have our own credit report that's going to give you the parameters you qualify
because
for.
There's a different scale, isn't there, that loan officers use into what?
Well, for all lenders, the between lenders, they're pretty similar because we all use the same, generically speaking, type of credit scoring system. But consumer reports are different. Anything that you pull as a consumer is going to be different than what an actual lender will give you.
Well, also what I want to say to people is don't ever complain about your credit score. I had a lender last night trying to sell me a loan for 18.2%.
Oh, man. Man, in today's market?
I know. So I said, no, I don't require any loans at this point.
Yeah. Now, I have prided myself in making sure that I can give people the, I guess for lack of better words, the hope to move forward on the path of assistance because you don't want to tell someone no. I used to have bad credit, and I can remember being told no because my credit was bad. And it wasn't a no, hey, you got to do this or you can do that, and then we can help you. It was just no, no, you can't do it.
What I'm going to tell people is, and this is a real quick story of my life, when I got to America, I sold everything, rented an apartment, lived on the floor for 6 months. All the money I had, I saved what I could. I bought my first house, paid 18.2% interest. All right. Saved, I literally, every penny I had, I tried to save for that down payment for that house. Because what I was paying in rent, I'm thinking, well, I can get a loan, for just a little bit more what I had on top, and I was making, good money. But the truth of the matter is, I sacrificed for that loan.
Well, that's my point. But you were able to get that loan. Yeah. A lot of times we have to tell people, we can't do anything right now.
It wasn't in the best condition, but I managed to.
But you got that thing though.
Right.
I'm talking about those folks that we don't have a product for them. We try to keep them motivated to still do the work because sometimes you got to put them in a credit repair situation to where they can work on getting that credit.
About what, 6 months, 9 months?
It doesn't always take that long. It can be 90 days or so if they do the work.
When I got here, because I had zero credit, it took me about 12 to 15 months to get to the point where I had everything set up to buy my first house.
Okay.
And it was a VA foreclosure. That was from saving up my deposit, saving up everything that I had. And actually, in the meantime, I actually bought an investment property with no money down again. So before I actually bought a house to live in it, I had an investment property. Oh. So.
And that's a unique path. For sure. But I would just say, just those basic rules, getting qualified, and then getting, of course, with a real estate agent that you can trust, that can show you a home that you want. Not one that they're pushing on you, but one that you want, that you like to your specific requirements to qualify. And I would say if you don't get it qualified from the first place you go to, or even the second place you go to, don't give up. Home ownership is available for anyone. I always like to tell people I can help anyone get a home. I can help anyone get a home. It's just a matter of what we need to do on the first step. If your credit score is not where it needs to be, we can help to build your credit now. Because I'm proud to say my credit is A+ now. I can go get approved for whatever I want to, but that took work to do that. So if I can do it, anyone can do it.
It takes time.
It does take time. It's not an overnight. You didn't get in a situation overnight, so you're not going to get out of it overnight.
Right. But I just thought it was a way of responding, because I do think there is a route for first-time buyers. I mean, there's different programs out there which your loan officers will tell you, and they'll advise you, based on your credit and the way on your income, whether you're self-employed, whether you've got a W-2 job. All these are factors that come into what type of loan they can possibly put you into.
Yeah.
So, I do think there's a way through it, but you just got to be in a position where you've got to be patient. Timing comes into it.
Mm-hmm.
Work with an experienced agent that can negotiate.
That part. That part. Look up reviews. Reviews matter, guys.
And yeah, we've got one really bad review, and they commented on an agent that wasn't even with us. But basically, speak to get a referral if you can. But I think you're always better off personally going to a branded company, because then you can always go to their corporate office if there's a problem, regardless who the company are. What would you suggest if their credit needs improving, James?
If credit needs improving, the loan officer should be able to at least give some guidance on what the next steps are. I don't do credit repair personally. I know that some people get involved into that. I don't. I originate loans. That's it. That's what I do. I don't try to do anything else. So I think it's always a benefit to be able to work with a company so that you can refer them to that company, and they can be held accountable for the portion that they do. And when they're ready to go, as far as their credit, they can come on back.
And we have a program just for anybody out there where if they choose to buy a house in the Houston area, or or even in Texas.
Right.
Yeah. If they want to buy a house and they need to work on their credit, and there is a cost for that, then basically we can work on the credit. Then if they want, then what we do is give them a credit back
towards closing costs.
Towards their closing costs.
Absolutely.
Which we will do. So basically, and it's done by a professional company. I've heard of some scams out there, actually.
There are some.
All right, for work on your credit, but this
There
is a
definitely are
legitimate
some.
company, and they will work on your credit. They will update you on a monthly basis on your credit. They will appeal different things from your credit. I think one of the biggest mistakes people make with credit is they turn around and they dismiss the credit.
Dispute it.
So if they've got a credit line, they'll dispute it.
Yep.
And that reduces.
It doesn't calculate into the score.
Right.
Yeah, and
So-
when it comes to
so-
qualifying, we have to remove that dispute so they can make the score go the other way.
That just isn't a good strategy to do.
Yeah.
And is there anything else that any advice that you can give somebody that's looking to get into that home?
I would say just don't give up. Save your money. If you're not saving money towards anything else, just start saving it towards your house. If you're paying rent, pay yourself first, put some savings away, and let that be for your home, your down payment. I can't tell you how many times we get people that they may be credit qualified, they may have a good job, but Stephen, they don't have any money saved.
Well,
And what's due in 3 days after the contract's executed?
well, I'm going to tell you a funny story of it.
Earnest money.
Right.
You got to pay your earnest money. So you're going to need at least 1% of that sales price.
When I was doing foreclosures back in 2008, I think I've told you the story. We went to do what they call cash for keys. We went down to cash for keys, knocked on the lady's door. She didn't want to let me in the house. And I said that, no, they're offering you money to move out of the house. Because, you know, they're repoing the house. You haven't paid your mortgage in like 9 months, 12 months, whatever it was at the time. So she wouldn't let me in the house for some reason. It was all very fishy. You go into a garage and there's this huge vehicle and it's got car covers on it. Being a car buff myself, what did I do? I turned around and said, I'm asking, but what's under there? And as she's signing the cash, she signed the cash for keys. So she wanted the money, which was like $2,500 at the time.
That's it?
Yeah. And they opened it. Do you know what it was? She'd been out and bought a brand new Navigator. Top of the range Navigator.
Navigator.
So she would rather spend her money on a car than what she would with a roof over
With a
her head.
house. I guess
And she's not the only one. There's a lot of people.
Oh,
like
yeah.
that.
Because unfortunately, people, they want to
Live
ride
within
in
your means.
success. Yeah, exactly.
That's the part that
Yeah.
you know you've got to do. But
That is unfortunate.
But anyway, so I guess that's it for another week. Quite a nice time, 30 minutes.
Oh, yeah. I know we talked about it yesterday, but just in case you haven't heard, one of the top players in mortgage got out of the business this week. They will no longer be doing
yes.
anything except in-house and minority borrowers. That's Wells Fargo. At one time, the number one mortgage originator in the country for year after year after year after year. They are out. No correspondence business.
Am I glad? Am I celebrating? You know, I've had my differences with Wells Fargo.
Oh yeah, I know. Of course, we don't
want them in the business. They're no good for the business.
They are they're pulling back. They're going to be doing their internal stuff.
Can't wait till the lawsuit comes around.
But no new, man. That $3.7 billion fine that they had to pay, that's a hit. That's a hit.
What
They're
was
not
the
many
fine
can
for? Overcharging customers?
overcharging customers, all kind of illegal practices that they were doing.
I had a call with them the other week.
Opening up accounts, and never funding them. Just a lot of stuff they were dealing with, unfortunately. I met a lot of good people at Wells Fargo, but man,
I met one, and
I'm glad I'm there.
She passed. But remember Jill Stoneburner?
Oh yeah, I remember Jill.
Yeah. God rest her soul.
Absolutely. But that's it for this week, man.
But basically, no, with Wells Fargo, I've got a question for you regarding
Oh,
Wells
okay.
Fargo. What were the fines for? Overcharging people?
Illegal practice. It was a laundry list of different things, but overcharging was one. Opening up in accounts and never funding them, because they would open up. They had these goals that they had to meet. That they would have illegally opening these accounts.
They were one of the largest people when they had the foreclosures for the robo-signing.
Probably so.
And for people that don't know, robo-signing was a document that you sign when you close on a house, and it says in the event that you cannot be contacted and we're foreclosing on your house, that the bank can sign on your behalf.
But here's the thing, though, Stephen, this stuff.
But it was outlawed. That was all changed.
They kind of dated it back to 2016 with this last fine, but it was a culture there. I started there in 2002, I believe. 2002, somewhere in there. But it was just the culture. That was just a part of the business. It was nothing. I mean, people did it, and there was really nothing that, anybody stopped. That's just because they were incentivized on doing a lot of those things and
incentives on just getting accounts
opening accounts, man. That's it. Unfortunately, that was it. So
it's not the quantity of business, it's the quality of business.
Absolutely.
But anyway, to all you people out there that are looking to buy a home, reach out, contact us. We'd be more than happy to advise you. Investors, if you're looking at getting into the business, or you know, we'd like to even get you on the show. There's investors that are out there that, you know, would like to comment on the market. I do think you're going to see some people come through who are looking to sell the houses. What do you think? Somebody asked me the other day an interesting question. I'll just say this before we wrap up. They said, what part of the market do you think will be affected first? And I said to them, I think it's going to be the $1 million houses, the high end, I think will affect people first.
Yeah.
All right.
I
And then
can
they
see
said,
that.
well, what do you think the second group of people are going to be affected? I said, new home builders.
Yep. I agree. They're already affected.
All right.
New home builders are already affected.
And then they said, what do you think the next stage is? And then I said, resale homes.
Resale, I think, will be okay in comparison to the other ones.
I don't think there's going to be much difference in resale homes.
Yeah. I think it'll be okay.
But anyway, with that being said, let's wrap it up for another week. Thank you for tuning in to the Texas Real Estate Show. Thank you for Everett for working in the background on all his hard stuff.
On the ones and twos, absolutely.
Yeah, absolutely. And thank you for Mr. James.
Yes.
So if you're looking at buying real estate, selling real estate, you want to become an agent in the Houston area, we want to hear from you, or the Lake Jackson area. And if you're looking to, you know, put yourself in the right direction to to basically get a loan and you need some advice, reach out to James. You can reach out to him through social
Absolutely.
media and all the real estate social media platforms, or you can call us directly. Anyway, until then, ciao.
Take
Peace.
care.